Good morning, traders from whichever side of the country. Well, you're watching me from. Welcome to today's morning market call. My name is Ian Elkington, market analyst at HFM. And in this session, we are going to talk about why did gold sell aggressively yesterday. We shall be looking at also China PMI coming out better than anticipated. We are anticipating Swiss inflation to come out also, and later during New York session, we do anticipate ADP non-farm employment. And how does all of this information reflect to us as traders finding opportunities in the marketplace? But first, I would want us to familiarize ourselves with the disclaimer that states the information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading in the financial markets do carry a degree of risk, but don't worry, I'm here to help you look at the markets in the right way. HFM has just launched the new Gold Drive promotion, where the competition did begin on 1st of March. It is going to conclude on 15th of May, where you have an opportunity to win the grand prize over 2026 Mercedes-Benz C-Class. How does this go about? When you do happen to trade every lot size on gold, you are going to earn 1 point. You do get an extra 2 points if these lots are profitable. Now, the points that you're going to get, you have an opportunity to redeem them for the prizes, where we do have 10 winners who will be eligible to walk home with an iPhone 17. You're going to redeem 1 point for a single ticket, and then we are going to have 5 winners who are going to walk home with a trading station, which includes a laptop, two LED screens, a keyboard and a mouse, 1 year internet, and an auto chartist and gold VPS access for 1 year, which are tools that HFM do offer. You are going to redeem 3 points for a single ticket for the second prize, and the grand prize once again is going to be a brand new Mercedes-Benz C-Class, which you're going to redeem 10 points for a single ticket. Head over to the HFM bonuses and promotion segment, click register now. Terms and conditions do apply. Looking at the economic calendar, during Asian session today, if I can switch this chart of mine to Nairobi time for us to get a clear understanding of UTC plus 3, we did have China releasing its PMI. Now, PMI is usually a really important news release for us as traders. Why? Because this is a leading indicator of how an economy is performing. They are going to look at various sectors, especially the manufacturing sector. Are you guys hiring? If you are hiring, what is your inventory looking like? How is business generally at the moment? Now, usually PMI is a leading indicator because businesses are usually the first people to react to changing market conditions. If anything was to happen to a particular economy, let's say, for example, inflation peaks to the upper side, the first people to be affected are the businesses. Now, this data usually gives us an understanding of how the economy is performing. Usually, it is graded between 0 and 100, where if the data comes out at 50, it means the economy is neither expanding or contracting. While on the other hand, if the data comes out higher than 50, it means the economy is expanding. If it comes out below 50, it means the economy is shrinking. Looking at the data for February numbers, we actually did see an uptick from the previous number of 50.3. We were having a consensus of 50.1. The data actually beat expectations, coming out at 62.1. If you can look at an official document released at that particular moment in time, this is the strongest improvement in manufacturing conditions in over 5 years in last February, meaning China is firing on all cylinders, as new orders did increase at the fastest rate since December of 2020. And this was just after the COVID-19 pandemic, which is the strongest expansion in production since June of 2024, as input price inflation rises to 44-month high as demand for raw materials does increase. Now, looking at this information, if China is going to produce more, that's good because these products have to be sold, and if it's being sold, they have to if you are exporting, if China is exporting, which they are major exporters, If China is exporting, it means they're going to be paid in terms of Chinese yuan because they cannot sell products with other currency. They have to convert it into the Chinese yuan for them to purchase these products. As a result, more Chinese yuans will be in circulation and the economy is anticipated to grow. We shall look at a chart of USD CNH in just a few moments' time. Look at what probabilities could we be looking at. We are anticipating inflationary numbers for Switzerland in the next 25 minutes, which the previous number was zero point 0.1. We are looking at negative numbers, meaning we are anticipating the Swiss franc to go to deflationary territories. Now, when you look at Switzerland, Switzerland is a really interesting country. Why? It's considered a safe haven because of their swift banking laws that were enacted post World War One. Now, in Switzerland, they do rely most on capital inflows. We usually do same. Currently, at the moment, they do have flat interest rates, whereby if you do borrow $1 million, you're going to pay back essentially $1 million to the central bank at zero interest. Now, this usually attracts more capital into the country, and as a result, we usually see Switzerland performing better with negative numbers. We shall see how the inflation numbers is going to come out, and we are also going to reflect on a chart of USD CHF. What would we want to look into? During New York session, the highlight of the day is going to be ADP, sorry, where we are going to anticipate the employment numbers, but this is going to be for the private sector. The previous number does stand at 22,000 jobs. We are looking at data for February. Now, the previous number is going to be January, which numbers did come out at 22,000 jobs. We are looking at a forecast of 50,000 jobs. If the numbers do come out higher than 50K, it means that yes, indeed, more people are being employed in the private sector, and as a result, you would anticipate the economy to head in the right direction. Whereas on the other hand, if the data comes out lesser than 50,000, it means that the economy is losing jobs, and we do anticipate it to impact the economy negatively. We are also going to have PMI numbers for services for February coming out also for the United States dollar. But I want us to look into something. For those who have been trading gold, yesterday gold sold massively. And we want to look at this information. Why did that happen? And what could potentially have triggered that massive sell off? I want to reflect on the Fed Watch tool, which is a tool that we traders and analysts use to look at what the FOMC is going to do in the next meeting, whereby the next FOMC meeting is going to be in the next 14 days and counting. Looking at the statistics and the probability currently at the moment, interest rates is between 350 to 375 basis points. Looking at the probabilities of the Fed Reserve cutting interest rates is only at 3.7%. We were anticipating the earliest the Fed Reserve could cut interest rates was going to be around June, July. But looking at the statistics currently at the moment, the numbers has actually gone down in terms of cutting interest rates by 25 basis points. Currently, this one stands at 34.1%, and the probability of holding rates now has gone up to 62%. If we look at throughout the entire of 2026, the last meeting we are going to have is going to be December. There's only a 33% chance that interest rates are going to be taken down to 300 and 325 basis points. Now, remember, we were looking at the Fed Reserve potentially cutting interest rates in the near future. But if whatever is happening between Iran and Israel has led to the closure of the Strait of Hormuz. Now, when this did happen, oil prices started to soar to the upper side. Now, remember, oil is directly linked to inflation. Whenever oil prices go up, everything does follow in terms of inflation. When you look at logistics, everything, any goods and service that a country does produce or offer has a direct correlation to oil prices. When you look at these industries, they do depend on oil. Basically, the backbone of an economy is dependent on energy. Now, when US and Iran, in conjunction with Israel, did attack Iran, we did see the Strait of Hormuz being closed, And as a result, oil prices shot to the upper side. Now, what does this reflect? It means inflation is going to peak to the upper side. If inflation goes to the higher side, then this means the Fed Reserve are going to hold on to interest rates for longer. If the Fed Reserve does hold on to interest rates for longer, it means that indeed the dollar is anticipated to strengthen as a result of capital inflows, whereby treasuries bonds are going to get a much higher yield compared to other assets. And as a result, we have seen the statistics move to the upper side. If we can just reflect on 1 week ago, as of 25th February 2026, the chances of having interest rates being taken down was around 33.7%, but we have actually seen these numbers now aggressively move to the downside, whereby we are anticipating only at least one interest rate cut this particular year. And if you look at the statistics, 1 month ago, the chances of taking interest rates down did stand around between the 325 to 350 was around 45.9, but actually the data has gone down to 34.1. Now if this does happen once again, it means the dollar is going to strengthen, and as a result gold would sell. And we are going to look at a few charts in just a few moments time, but first I would want to talk about the loyalty program, which is a program that HFM has. I didn't know. Indeed, the loyalty program is currently active. Once again, this is the biggest program, and you have up to $500,000 that you can potentially win in cash prizes. There's going to be a supercar up for grabs, a choice of either a Lamborghini or a Ferrari. There's going to be also luxury vehicles up for grabs, a choice of either a BMW or a Mercedes Benz. There's going to be an all inclusive luxury vacations and high end electronic devices, choices of either Samsung or iPhones. How does it work? Now, for every trade that you're going to take, you are going to earn TRPs or trophy road points, and this is your currency for unlocking trophies. Now, the more TRPs that you do gain when you do trade, you can redeem them for cash prizes where you use them to level up, where they are going to be 4 levels. You're going to start as a rookie, where for every $1 million in terms of traded volume, you are going to get 250 TRPs. Now, $1 million in traded volume is equivalent to two lot size on gold. Now, this 250 TRPs, the more TRPs that you do have, the more chances of you winning and redeeming them for cash prizes. The highlight is going to be an apartment in New York City, either a choice of the apartment or $500,000 in cash prizes. The maximum level that you can advance to is the legend, whereby for every $1 million in traded volume, you are going to earn 400 TRPs. Head over to the HFM bonuses and promotion segment under the loyalty program. We do have the HFM loyalty program terms and conditions do apply. I would want to switch over to the charts. If you have any assets, I already can see Lil Dante wanting me to look at Euro USD. Okay, we shall look at Euro USD. Now, the euro against the dollar, yesterday we did see inflation numbers coming out actually better than anticipated for the eurozone, but we did see prices of euro USD actually move to the downside. Why? Because currently at the moment, I want to focus first on the dollar. What is happening to the dollar? And then we shall revert back to these currencies. I would want to start by looking at the dollar index first. Ever since the week did begin, and this was after the markets digesting the geopolitical tensions, we did see the dollar index gap to the upper side, and then the dollar index started moving aggressively to the upper side. From the opening price of the week till where we are, the dollar index has moved 1.29% to the upper side. Now, the dollar index is a measure of the dollar against a basket of six currencies, with the euro having the most amount of weight. We do have the Japanese yen, the British pound, and also the Swiss franc and Canadian dollar also accounting for a weight in the dollar index. Now, usually, if the dollar index moves to the upper side, it means the dollar is strengthening against other currencies, especially the six currencies that I have mentioned. Now, when the dollar index moves to the upper side, once again, the dollar is strong. And as a result, you do anticipate everything against the dollar to weaken. And I would want to reflect on now gold prices. What happened yesterday? Quite interesting. Looking at ever since prices did open to the closing price of yesterday, prices did move more than 4.45% to the downside. If you can look from the highs to the lows of the day, from the highest point to the lowest point, prices moved more than 3,800 pips. That is close to 7% of its total value. And let's explain this once again. When Israel with the US, in conjunction with the US, did attack Iran, it led to the closure of the Strait of Hormuz. When the Strait of Hormuz is closed, 20% of the global oil supply is going to be affected. If oil is affected, if oil prices moves to the upper side once again, inflation does stick to the upper side. If inflation does stick to the upper side, the Fed Reserve are not going to cut interest rates. If the Fed Reserve don't cut interest rates, it means that more capital will be coming into that particular country as a result of capital inflows, where investors, traders would want to now invest in treasuries, bonds, government issued bills from the United States. As a result, the dollar is anticipated to strengthen. Now, prior to the attack on Iran, we were anticipating at least two interest rate cuts for the Fed Reserve. But as a result of the information that we are getting right now, there's a high probability the Fed Reserve are not going to cut interest rates. And as a result, the dollar is anticipated to strengthen. Reflecting back on the Fed Watch tool, once again, there's only a 33% chance by the end of December that we are going to get the 25 basis point, and we're anticipating at least two 25 basis point cuts this year. But right now, we are only anticipating a 33% chance for one interest rate cut, which potentially means the dollar is going to strengthen. Now, if the dollar does strengthen, what does that mean for gold? Gold usually moves to the downside. Now, yesterday we did see mechanical sell offs in the markets, whereby the market started gyrating, where now money is moving from the safe havens, it's now moving towards government issued bonds and bills. We shall look at the 10-year treasuries, we shall look at the stock markets also, what's happening. Now, once again, we are almost about to have, now, yesterday was the first time in quite some time, if I can reflect, historically speaking, the last time prices was trading below the 200 period moving average was back in 17th of February. But right now, from yesterday, we did see prices going below the 200 period moving average. We are about to have a crossover. If we have the 200 now crossing above the 50, then this would indicate now gold could start selling in the near future. Yes, it is still considered a safe haven because of the geopolitical tensions. But we have to look at, okay, right now everything has been accounted for, and traders would want to look at new information. And the new information right now is inflation. If oil prices, which we shall look at right now, when you look at US oil ever since the week did begin, did go up to the upper side from the closing price of Friday till where we are currently at the moment. Oil prices has moved more than 14% to the upper side. Now, if oil once again moves to the upper side, inflation is going to tick to the upper side, because remember, once again, an economy is run based of energy. If energy prices are going to be affected, it does mean everything else is going to be affected. It creates a domino effect. And as a result of this, the Fed Reserve are not going to cut interest rates. There's a high probability for that. And as a result, we are now seeing, look at this price action, a beautiful retracement on the 50 period moving average. Prices is now taking to the upper side. I would consider looking at more net long opportunities on oil prices. If at all we do break the highs that was formed yesterday during New York session, a clear breakout and a closure above this region, I will consider looking at prices potential. This is on US oil, potentially going to around $80 a barrel in the near future. Now we do have US oil, and then we do have UK oil. Where are you, darling? Here you are. Now, looking at UK oil, now UK, the difference between the two, usually US oil is more of refined oil, and then UK oil is more of crude oil. Now, looking at UK oil, similar price action, but yesterday we did see prices approaching the 85 mark, around 85.3 uh, around 85.3 8 mark. Now, analysts are looking at if potentially the Strait of Hormuz is going to be closed, there is going to be disruptions with oil in the near future, and there could be supply issues. As a result, oil prices could tick to the upper side. We are having some analysts looking at almost prices reaching $100 a barrel in the near future if at all Iran does continue the threats of sinking ships around the Strait of Hormuz, which is a narrow passage, less than 33 kilometers wide. But once again, when you look at this information, 20% of the world's oil goes through that region. If it's going to be affected, there is going to be disruptions in supply of oil prices, and as a result, we would anticipate prices moving further to the upper side. Now, going back to gold, I would want to reflect on what's happening currently at the moment. We are seeing prices now trying to resist. We do have a resistance around the 200 period moving average. What I would want to pay attention to is now new information that will come out during New York session. Remember, once again, we do have NFP numbers coming out later this Friday, and this could potentially be a really turning point, a key turning point in the markets as a result. Now, if we do have a crossover, when the 50 goes below, the 200 goes above price action, we do get clear signs of sellers in the markets. I will consider looking at shorting opportunities further to the downside. Silver prices was not left behind, whereby yesterday we did have a change of character, where prices was making higher highs, higher lows, higher highs, higher lows, higher highs, but it reached this particular region yesterday, whereby now prices started breaking the most recent lows, formed a high. The high at $91 an ounce failed to break the high that was formed, and now prices started making new lower lows, lower highs, lower lows, lower highs. If I can pull a Fibonacci from this recent high to the recent low, as you can see right now, prices is on a golden retracement region on the Fib level. And this could be a really good scenario for prices to continue moving further to the downside if at all the data does come out positive during New York session in terms of ADP numbers and also NFP numbers coming out later this week. If it does come out positive, then it means silver prices could potentially move further to the downside. I would want to look at bearish candlestick patterns forming around the 85 mark on XAGUSD for potentially prices to move even further to the downside. I would want to look at the lows that was made around 77.9 mark on silver, which was yesterday. I do believe I do have a lot of assets you'll want me to look into. So one guy wants me to look at Aussie. This has been a really good asset of late. Now, Aussie dollar data has been coming out really positive for this economy. Ever since last year, mid last year, yeah, around mid last year, we did see a lot of weather disruptions. Now, when you look at Australia, they do depend a lot on minerals, and especially iron ore. They do have a lot of mines. When you look at gold, when you look at iron ore, they usually have a lot of um, production in terms of mining. Now, last year, they did get weather disruptions. It was flooding in most of the regions in Australia, and as a result, mining operations did cool down, and also tourism was affected. But towards the end of last year, we did see now the markets, the economy starting to pick up. The data has been coming out positive. If you can reflect on employment numbers that came out last month for the Australian dollar, did come out positive. GDP numbers did come out positive. Basically, Australian dollar, the Australian economy is firing on all cylinders currently at the moment. But the majority of last month, which was February, we did see prices consolidate quite aggressively. Why? Because prior to that, the Australian dollar was strong, but the dollar was weaker. Hence, the Australian dollar moved to the upper side. But if now the dollar starts to be stronger and the Australian dollar is stronger, then we do anticipate consolidation in the markets. What we would want to see is an economy that is strong and paired with an economy that is potentially weaker for prices to move. But if both markets are strong at the same time, then we usually see consolidation in the markets. Now, yesterday we did get signs of the dollar now starting to strengthen against the Aussie, where we did have a choke once again. Looking at how prices did open on This was the closing price of Friday. This was the opening price of Monday. Prices did gap to the downside, tried to correct, but closed well below the closing candle for Friday, which was around this region here. And the region that was support on Friday is now acting as a resistance for yesterday, whereby we did see prices during Asian session rally to the upper side, but aggressively moved to the downside, closed well below the opening price. We are seeing something similar happen today, where right now, as we do speak on the H1 time frame, prices are about to retrace. If we do have a region of resistance forming around the 50 period, which also coincides with the last candlesticks. That was formed yesterday during the trading session. If you do have bearish candlestick patterns, data continues to come out positive for the US dollar. I will consider looking at shorting opportunities further to the downside. But on the other hand, if you do have clear candlesticks closing well above the highs that was formed on the week, which is around 0.71129, I will consider looking at buying opportunities further to the upper side, but this is going to be dependent on the data that is going to be released. I do have Zix wanting me to look at the Nasdaq. Now, the Nasdaq is going to be affected usually. If the dollar is stronger, look at it from this angle. If the dollar is stronger, it means that government issued bonds are going to fetch a higher yield. Usually, when the dollar is stronger, we see the stock markets dip to the downside. Why? Because now institutions will want to purchase more government issued bills because they are offering a higher yield. But on the other hand, if the dollar is going to be weaker, we now see usually investors, institutions, and traders rotate onto the stock markets because they are going to get a much higher yield. Now, ever since the markets did open on Monday, we did gap to the downside, had a short term correction, but the majority of yesterday, similar price action to what we did see on gold. We did move aggressively to the downside. We were looking at this region yesterday, but we did have a fake out whereby prices did tap into those lows, but immediately closed above that range. Ever since Asian session did open today, we are now seeing prices reject the 200. As you can see, prices is nowhere near the 200. If we do have bearish candle patterns forming around this particular region, and I would want to identify now the lows that was made yesterday. If we do have a clear closure below this range and the data continues to be positive for the dollar, I would anticipate the Nasdaq potentially moving further to the downside. We did have a change of character where prices are now making lower lows, lower highs, lower lows, lower highs, and so on and so forth. That is it going to be for the Nasdaq, but this is going to be dependent on the information that you're going to receive. Lil Dante wants me to look at the Dow Jones. Similar price action to what we did see on the Nasdaq, where prices yesterday did move aggressively to the downside. We did have a very beautiful pattern. I really like this pattern called a morning star, whereby prices are bearish. We do have a doji candle and a large bullish engulfing candle, signaling that whatever was happening to the downside is now correcting. But looking at the general scope of the markets, we are seeing prices retrace on the 50 period moving average, signaling that yes, indeed, the bears are in control over the markets. I would anticipate the next leg potentially to move to the downside if at all I do get clear signs of markets being bearish. Now, looking at the Dow Jones, if you can just look at historical charts, usually within the first few hours of the day, Asian session, early London session, the Dow Jones does not move because most of the companies all of the companies that constitute the Dow Jones Industrial Average do come active after New York session does open, and as a result, during Asian session we don't get a lot of volatility. But remember, during New York session today, we are anticipating services PMI, which is what these companies are offering, the services, and also we shall be looking at the ADP non-farm employment, which constitutes all these companies which are private entities. How are they hiring currently at the moment? Okay, I can see there are no more assets that you'll want me to look into. Beautiful stuff. Now, we didn't look at Euro USD. We were supposed to look at Euro USD. I do believe that was the first asset we were supposed to look into. But similar price action. If you look at what these assets are doing, when you look at Euro USD, also the Nasdaq, when you look at gold, also they do have similar price action, almost correlated positively, whereby we are having a change of character during Monday. Did gap to the downside, had a short-term correction into that gap. Prices are now making lower lows, lower highs, lower lows, lower highs. If we do happen to come around the 50 period moving average, have a clear bearish candlestick pattern pattern, I will consider looking at shorting opportunities potentially further to the downside as the dollar is strengthening currently at the moment against most of the assets. That's going to be it for the charts. Now, I would want to show you how to register. We do have NFP coming out this Friday. I did mention about that. And also, we are going to have an analysis on that Friday where we shall be at the Nairobi garage in Kilimani. As you can see here, this is the poster. If you head over to our socials, whether Instagram, Facebook, any socials that we do have. If you do happen to go through the post, you do have the non-farm payrolls free live analysis event. You have an opportunity to register now using the link provided in the bio. Once again, head over to our socials and on HFM Kenya. So we are going to be with HFM Kenya. If you do click on the post, you do have an opportunity to register for the session. There is going to be a link in the bio. Have an opportunity to book your slot, and we shall be looking at this information live with you. That being said, I shall see you tomorrow when you do see me next. We do have live classes, physical classes, chat. We do have physical classes at the Oval Building each and every day, Monday to Friday. And we also do have online webinars, which we usually conduct them every Monday, Wednesday, and Thursday. The link is if you go to HFM Webinars Kenya, you are going to have an opportunity to register for it over there. Also, we are going to be having giveaways. We shall be crediting door prizes on the accounts for those who happen to be there. I would want to mentor you in Forex the right way, and I would want to kickstart your journey in trading by funding your account. That's going to be it for me. I shall see you when you do see me next. Cheers. My name is Ian Joseph, market analyst at HFM. Remember, capital preservation is crucial and paramount for us as traders. May the pips be with you.